All right, it is 9 a.m. Good morning, everyone. First and foremost, I want to give a salute and recognition to all our veterans and for those who have served our country, foreign countries as well, and all the veterans everywhere. So if you, most people have someone in their family or served themselves, and out of respect, we'll give those who fell on the battlefield a moment of silence. I think is important, just to give a little bit of due respect for those soldiers who gave their lives for their country. Thank you all very much. All right, so this week, many of you know, I will be headed to Germany tomorrow morning. So today is a big preparation day. Yesterday we did all our reports, got everything in line. Yes, it was football Sunday, but you know, we had the stock advisory service, the commodity advisory service, and research to do for this week. So that's what part of trading is all about. And what we do in planning and scanning is we come in here Monday morning and I kind of share the thoughts, the directions, the technicals, so that you guys have a better gain and edge so that you can make better informed trading decisions. And that's the key. Rather than someone saying, I don't think the stock market can go out any higher, it's overvalued, we like to see testifiable evidence in the form of the tools that we try to teach everybody how to use them, how to become their own analysts here, and then, of course, execution techniques and tactics. And if you were in the trading room Friday, one of the tactics and techniques was right out of the TTU course. It was a failed doji high. The market had continuity across all the markets for a reversal rally. I personally took that trade, and many of you know the market had a nice move to the upside. And I had to leave the room early, and I did announce that I would tweet when I was going to get out of the balance of my Q puts, and I was contemplating that, and I did send that tweet out, and so that trade is closed out with a nice profit. So we've done several different trades in the room, and if you're not familiar with the Twitter, I would encourage you to sign up for them. How you sign up for them is very simple. You go to personsplanet.com. I'll throw it up here real quick, and so everyone can see this. All right, so you just go to personsplanet.com, hit the little T, the Twitter, TWTR is now the stock symbol. It IPO'd last week. So hit the Twitter button and you can see all the neat thing about it is not only do you see the tweets, but you get them and you can see when they were sent out. So for example, I sent this out at 9:16 in the morning. And to tell everybody, by the way, here's my alert. I'm exiting the QD's 8381 put spreads. Boom. All right, so I took half on the day before on Thursday, and so if you want, just your name, your email, sign up, and you'll get those tweet alerts, and they've been pretty good. We put some pretty decent information there. We talk about follow up with what we've talked about in the room. For example, 2 weeks ago we talked about a high close doji in TZA, which was a bearish. It's the inverse ETF on the Russell. So if we expected the Russell to go down, we'd look for this to go up. It did happen. We also took, you know, as I guess a conflict I have is that we have an advisory service at PA Stock Alerts, but some of you folks are in that as well. And so, you know, we just make a comment, by the way, we're out. Lorillard, for example, was one of our stock picks. It was the e-cigarettes. I've been talking about that for probably since midsummer, August, July, something like that. But in any event, the stock pick that when we finally got into picking Lorillard was on a breakout technique or pullback on that breakout, so to speak, at around 43 and change. And we scaled out and moved our stop up and then finally hit a profit objective. Now, we also in here talked about, for example, a low close doji in the euro currency. So there's some really nice stuff in here that you can find. And I think it's a good way to receive information if there is any follow-up from what we've discussed, not only in the trading room, because many of you, as I recognize, cannot be in the trading room all the time. You have other obligations. But if we've talked about something in planning and scanning, if it's a follow-up in something that we've done in our trading room, If it's something that I'm doing personally in my own trades, then I'll send that tweet alert out, okay? So that's great information there for everyone to get. Best price of all, it's free of charge. Next, this Thursday, I believe, no, maybe I think it's Thursday or maybe it's Friday. It's going to be an interesting day because I'm doing a live trading challenge in Germany, and then we go to Vegas the following week. So, and we're doing another live trading challenge there, and so it'll be interesting to see how our day trading techniques shore up against others and the indicators. I did make mention the other day that a lot of times my longer-term outlook kind of hinders my day trading aspects, because if I'm longer-term bullish in a market, you know, you might get some great day trading setups to sell the market. You get these back and flows. Day trading is kind of a momentum game. I still believe, though, that your longer-term outlook influences the shorter term. It's, in other words, if we're in a bullish environment, it's a more fruitful process to look to buy breaks, and you get more fruit off the tree. That's not to say that we don't have, you know, bearish reversals on strong updates. So let's, with that thought, let's take a look at what we see for the markets overall. As the bottom row shows, this is the weekly charts on the E-mini S&P, the NASDAQ, the Russell, the New York Stock Exchange Composite Index, and the diamonds. The diamonds did break out. The AD line on a weekly basis broke out to the upside. We've been talking about sector rotation, monies coming out of potentially the technology space and going into other segments. And guess what, folks? We predicted it, and it's been really what's going on. It was almost as if I took a daily chart of the Qs, all right? If you take a daily chart of the Qs and I highlight a daily chart of the diamonds, and I'm going to put these up to each other. And so as you can see, it took a little while, but it finally came to fruition. You can actually see where the NASDAQ 100, the advanced decline was going down, and the diamonds, the advanced decline was going up. So we were seeing, and that sector rotation did manifest and materialize. So the question begs, where do we go from here? The markets still have a bullish bias in all fronts, but I think what we're going to continue to see is that sector rotation theme. I think there's some, as we go to the other markets of interest, namely the commodities. So let me go over to taking a look at a couple things, because last week what we really spent a lot of time on, and if you didn't have a chance to review last week's planning and scanning, I encourage you to do so, because it doesn't get much better than that. I'm sure it can, and I'm sure we will strive to get better, but the overall feeling was that we were in a bearish bias for gold prices. We really kind of elaborated on gold going lower, and we would be looking at bearish ETF inverse plays. And we actually gave several DGZ, DUST, and DZZ, and of course DUST plays off the miners, gold miners. But if gold goes down, typically you'll see downturns in the gold miners, which we did. Now, on a daily chart today, if you notice, we have a newer low. So the market's still making lower lows. Now, today is a holiday, and granted, even though the markets are open, it's going to be very, it could be very thinly traded markets. The Europeans, there's a lot of people that do take today off, so therefore, you may not see some really great, vibrant moves. So therefore, the trading room is closed today, and I wanted to come in here because some of you do trade, and to get an edge on the market to follow up on a few things. So with that said, I still see the bearish momentum alive and strong in bonds. In fact, last week we generated a weekly sell signal in gold futures. So for this week, if it doesn't just immediately crash and burn and go straight down, there's a couple things that you want to watch for. If it is truly to remain bearish, we really shouldn't. We have a couple things that you want to focus in on, and that would be on a weekly basis. And I don't know if it will happen, but if you get a day or two, today, tomorrow, a pause in gold prices, a pause meaning they just linger right in this zone between, you know, the, let's call it the 1290 and 1280 area, maybe call it 1300. If they stay somewhere in this range in the next 2 days without trying to recoup the losses. So if we stay kind of in this range over the next 2 days, then it gives it a chance, a pause for these moving averages to catch up to price, and that's more bearish than you expect. All right. At this point in time, on a weekly basis, if it's going to reverse, and if I would say I'm wrong on a close, another equal and opposite, I'm wrong on a close above the monthly pivot point, which is at around 1312, let's call it. All right. Now, what's interesting about that 1312 is we isolated 1309 as a major support several weeks back. I said if the market is bullish, then 1309 to the downside needs to hold, and it didn't hold, and now we're bearish. For this market to go back up, it's not 1309. It's got to close on a weekly basis above 1312. Now, that might happen over time, and we'll develop newer support and resistance levels down the road. But for this week alone, the market has made newer lows on the week, which is generally, markets can make newer lows, as you can see right here. They make a lower low. It's do they come back and close closer to their highs? And if we make a newer low and don't go anywhere, and we stay below this, let's call it 1306, 1312 level, if they do not come all the way back up, then and just pause in here in a narrow range, it's just pausing before another potential decline to the downside. Everything suggests to me volume levels, open interest, a lot of stuff that I've done behind the scenes still indicate bearish analysis and a bearish outlook for gold. So I just thought I'd remind everybody about that. Even though we do have a seasonal trend to the upside, I may just go back in time and history and say, well, we do get a little bit in the month of November sideways to actually down action with a little minor blip. But if you can see this overall from August, yeah, sure, the market has an uptrend, but depending on where you're long from, we see continued declines going into maybe mid-December. So we want to say, you know what, the technical supersede the always technical analysis supersedes the seasonal analysis, because remember, seasonal analysis doesn't work all the time. That's what people struggle with. They think it's a guaranteed thing, and nothing in this world is guaranteed. So with that said, I still have a bearish outlook. Keep in mind, a 1 or 2 day pause in the market, then this thing's going to head, probably giving it a chance to head lower. So on a short side trade, all right, if the market breaks this, if everyone can see this, this was the buy signal, the high close doji. The low on this breakout bar, let's call this, it's 1273.70, okay? Let's call it 1270, just call it 1270, right? 1269.5, 1270, okay. So if we break and make a low below that 1270, I don't think it's this absolute swing low. Some people will call that a swing low. It's a pivotal swing low. But for my work, the bar that created the high close doji, that was the momentum bar. If it breaks below the low of that momentum bar, then typically you'll see a further decay in price. Okay? So watch for breaks below 1270. If it breaks 1270, then it's, you know, you got about a $20 move plus, because there's probably a boatload of stops underneath that swing low. That was the October low. Then after that, what do we have to look forward to? If you take out that level, the next major important level, of course, isn't the absolute low, but it would be somewhere against the average of lows, and that's around 1220. And 1220, 1225 is a psychological area, so we got to keep our eyes peeled there. So I've given some good, strong outlay points to focus in for this week. If you're bearish a market, then you don't want to see this thing close Friday above 1312. If you're bearish this market, you want to see a continuation down, and you want to see this thing break 1270, and you know, just fight the urge to take a profit, because if it breaks 1270, it's got a little bit more. Typically, you'll see some more negative momentum to the downside on a breaks, especially when we get a break to those points. All right. So that concludes our analysis on gold. I want to move into the other fear factor market. Gold's a fear factor. People were buying gold because they were afraid of the Fed, inflation, safe investments, the government, just whatever you want to come up with. It was the fear factor trade. So what else is a fear factor trade? Treasuries, because they're safe. They're a risk of buying a bond, but your return, if you hold to maturity, you'll get your money back, right? So another fear market, I call it, is the bond market. And it's interesting because I wanted to point out to you some levels of why we look at what we call relative strength, or why we look at spread charts. Relative strength is comparing not Wells Wilder's indicator, the RSI, Relative Strength Index. I'm talking about comparative relative strength analysis, as discussed and covered in not only our TTU trading course, is something that we've been using for decades. And as a commodity trader, the first thing you did was learn about spread trades. You know, we had this saying over at the Chicago Board of Trade when I first got into business: bulls make money, bears make money, and sometimes spread traders take all the money home. Because spreads will at times give you an inherent look, a better look at the internal market structure of a market, better than looking at just individual markets. And I think this picture describes that very well. If you take a look at the 10-year notes right here, look where note prices are in relationship to their lows that we had in September. Obviously, we're about 5 handles higher. Now, take a look at the Treasury bonds. We're at 131. And where are we in relationship to the lows that we had at the same point in time? We're about 3 handles higher. But the point being is we are higher. All right, so what's the price structure difference? And that's what the relative strength gives us, or a spread chart tells us. What's the relative price difference between bonds and Treasury notes? Well, we know that both of the individual markets haven't broken their lows. But collectively, if you measure one against the other, folks, we broke the lows. This is not typically a good sign if you're bullish the market, all right? This is saying that they are coming out of bonds, and bonds is the, you know, more and more people buy bonds, and the reason they buy bonds is they're scared of a stock market correction, they're scared of upheaval, they get better yield on the long end, so they get better rate of return, especially in times of uncertainty. So what's the uncertainty? Government shutdowns, what's the uncertainty? Inflation breakouts, what's the uncertainty? A change in the Federal Reserve's buying of Treasury bonds, a change that rates are going to move higher. There is a change. So a change is not good sometimes, and as you can see right now, if bonds are going lower and they don't feel the need to buy bonds, and you also have gold moving lower, which they don't see the need to buy gold. Both are kind of considered fear markets, fear products, safety products to hedge against adverse major market moves. And both gold and bonds look very weak at this point in time. In fact, I'll go a step further and share with you a weekly chart on the 10-year or 30-year Treasury bonds. And this is a weekly chart. So we went down, and not only did we go down on the bond market, but we went down and formed a person's pivot, the PPS sell signal. All right. So we did form a weekly sell signal in the market. We were actually hoping to see this market rally, get up into kind of like this resistance so we could get short. And you know, we focused on equities and we focused on gold instead. So it's still all good. But at this point in time, I would say for this particular week, notice that gold is a little bit different, but gold, if you remember, had a down market, then an up market, then a down market, like equal and opposites. And bonds have kind of like almost that same type of structure in direction of price, all right? But the moral of the story is, so gold and bonds are actually, if you look at it in that content, moving in somewhat of a tandem relationship. So just like in gold, the bond market, for what I would be looking at on a weekly basis, 1 or 2 days, I don't think if the market's truly bearish, we should get back to, you know, just under these moving averages. So we get another day or two of pause of the market. So what do we have out this week that could cause the market to gyrate? Today there's really no economic reports, but we do have some earnings out that not anything that's going to stand out. Dick's Sporting Goods, Hanes, Perry Ellis, Silver Wheaton, Standard Parking. After the market closes today, you're going to have Global Brass and Copper, Sotheby's, which is stock symbols BID, and Strategic Hotels. Tomorrow, you have Home Builder, D.H. Horton, Dean Foods, Dendrion, which is a dead market. You have the satellite companies, both EchoStar, which is SATS, and Dish Network, DISH, Pandora, I believe, and News Corp, NWSA. After the market closes, you also have a very a stock that we all see on TV commercials, the Magic Jack, right? Magic Jack is the symbol CALL, C-A-L-L, very cute. Magic Jack earnings come out tomorrow. Wednesday, we're winding down earnings seasons, but we have Macy's, and we also have a regional bank, MBI. MBIA Bank, MBI is the symbol. Eagle Shipping, Cisco Wednesday after the market closes, which is big Dow component, as you know. NTAP, Remax. Thursday, we get Kohl's, Merck, I believe, Nordstrom's, Walmart is on the list, Williams-Sonoma, and Friday is really not even worth mentioning. PLC, Children's Place, PLC, it's in the retail mart. So this week we have some earnings, but none of those are really going to affect the market. We have a Treasury budget report coming out on Wednesday. I think the big stuff that's going to come out is closer to the end of the week, and it's in Europe as well, as we deal with the GDP, the Eurozone. So there is going to be some interesting numbers coming out when I'm in Germany on Thursday and Friday. So this week we have retail sales out. That'll be very important to see the health of the consumer. Are they spending, and what are they spending money in? So don't forget, it's also option expiration week. So there's a lot for everyone this week from an earnings standpoint, to take a look at how the department stores are doing with Macy's, and as far as looking at the tech giant Cisco, which is a Dow component. So there is something that caused the market to move. Of course, Janet Yellen starts, I believe Janet Yellen, we start with her Senate testimonial. So planning and scanning this week, you have a lot to plan for, and you definitely have some potential market shaking news events to keep things going. Remember, every day that goes by, we get closer to the end of the year. Last week we did an event that we talked about 39 days to the end of the year and 39 trading days. Now that's just winding down. This year, it's, Thanksgiving is going to be interesting for some because it's the first day of Hanukkah. So, this year we're winding down, and we've got a lot of things to focus in on, because I think if you can have a good this week should be a very vibrant week for trading. Next week should be a vibrant week for trading. The week after is your Thanksgiving week, your Black Friday, which typically, statistically, the market does rally in stocks the day after Thanksgiving. And then you got the bigger event, which is called Cyber Monday, which would be Monday the 2nd. And then that week we get the unemployment report again, and that'll be pretty important as well. So there's a lot going on. So we probably should not be resting on our laurels. I think that we are coming close to the end of the year, and as such, we have a lot of potential for markets moving, especially gold. If they liquidate gold, if funds are short bought equities and they still need to buy, they could run this market up. Believe me, trust me. I've been kind of a petrified bull in the market. We keep looking at stocks to buy in this room. Last week we talked about ADI. We talked about to watch ANF, which is Abercrombie and Fitch. I'll go over that real quick. We talked about LLTC. We talked about DGX, Lilly, Masco. These are the areas of stocks that we talked about. None of them really hit, so we're gonna go over those as well as others. What I want to focus in on and conclude here is that we have market moving events this week, and in the bond market we have a situation where the spread between notes and bonds has weakened and made a new yearly low. As you can see, bonds have not. Typically, when the spread weakens, the individual markets weaken too. It's a clue. It's a hint. It's giving us an edge. It's not a guarantee, but it's generally speaking, if those spreads narrow, that means there's weaker prices coming. And so I think this week, one of the things you focus in on is a couple trade ideas. A snapback, I don't think there's a chance if this market's truly bearish, this market should not get to these weekly moving averages. If the market is truly bearish, it's not going to even get close to those numbers. In fact, you probably get it to like maybe, let's switch to a daily chart real quick. All right, so on a daily chart, you know, you probably won't even, and look at last week's range was mostly 1 day. It was, you know, the unemployment report. So I would say a midpoint into like the 130, I would say slightly underneath 133, 132, 26 or so. And I'm going to leave this up on the chart so we can review it possibly next week. So 1 or 2 days of decline in there. We've already breached the monthly support. Let me turn on my quarterly support just to give you an idea. For the quarter, we actually came close to the quarterly resistance. I was hoping to see us rally a little bit higher so we can get a short off in the market there. As you can see, the quarterly pivots is giving us a narrowly defined range for the quarter. Well, the quarter is all like, I mean, what, half over. But what it is showing us for the quarterly pivots is that support's down here near 125 and change, and that would break us down below that 130 level. So rallies up in here, this could be a situation where we could see continued weakness. Watch for rallies up there close to 133. You don't want to see the market get a close above 134 and a quarter. So your objective would be down here near 125. I think it's pretty evident that if the market does go down, you think they're watching for these lows to get hit? You think they're looking for, you know, maybe stops underneath these lows in here? Sure they are. So they're going to try to press the market lower. Another thing is we want to see if the market moves lower in the next couple days. You definitely want to watch your on-balance volume, and you want to see the market continue down with a lower move or a lower reading in on-balance volume. So if price goes down, we want to see a move with heavier volume. You want to see that down tick, okay? So keep your eyes peeled for those levels, and I think, you know, if gold's going to move down, bonds are going to go down too, and I think the knob spread shares that with us. All right, so now let's go over to last but not least, and planning and scanning page. Here we go. All right. Well, actually, as a disclaimer or disclosure, we're actually in Cisco. Cisco's a long holding of PA stock alerts, and we got to deal with this because we have earnings coming out. We're up about $1 on this trade. I know that's got nothing to do with this, but this session of planning and scanning, I think what it is important to notice is that, or at least learn from, is that with planning and scanning and trading in the markets, you've got to be aware, and that's what it is. What's coming out this week, and what stocks should you be looking at? With this particular earnings season, we saw just a slew of stocks that had, you know, priced in options. Probabilities were pricing in 2-3% moves, and they came in 7%. They were pricing in moves of 7%, and they came in 2%, and then by the end of the next day, they were at 12%. We saw just amazing moves in individual stocks, but yet the indexes didn't really move because it's just grinding sector analysis. Our sector analysis is showing that they're just moving money from one sector to another. So the leadership in the market last week, incidentally, the leadership in stocks, in case you weren't aware, once again, interesting, the regional banks. Regional banks, now this is the Baltic Dry Index, but the bank index right here, and this is on a yearly basis up 28%. There we go. All right, so, but I wanted to focus in on weekly analysis. So weekly analysis, you know, it was kind of mixed with the transportation's down just slightly. The materials up over 1%. We saw moves in the financials up 1%. But remember, the financials, the XLF, is a diversified index. It's not truly a bank index. So if you want to watch bank index, go to the BKX for the week. It was up 2.47%. the KRE, which is the regional bank index, was up 3.75%. There were your winners. BDI, that's the Baltic Dry Index. It was up less than the KRE. So pretty crazy just to watch that, and that's the opening bell. And so what does that mean? We still have bank index and the regional banks soaring to the upside. Last week, we looked at, and I just want to quickly move into to conclude, analog devices. Analog devices came up on our radar screen. We were looking for a pullback, and it never happened. Next was DGX, which is healthcare, Quest Diagnostics, excuse me. And, you know, great analysis. And so these are the annotations from the analysis from last week's work. We had this big high close doji. We thought we might get a little bit of a pullback, and the only thing that happened is Quest Diagnostics gapped higher on the open, and it never pulled back. So at least we had, again, an idea of what stocks look like. I would still wait for a pullback, but I think we'll be waiting a while. But the market's going to probably look to just absorb this big move to the upside and wait and give it a chance for these weekly moving averages to catch up with price. So I'm going to leave those annotations up there. Linear Technology, LLTC. Once again, these are our areas. We thought we would get a little bit of a pullback, 39.93, with a risk of 38.28. I still like that trade. We still have seasonal strength in the market. This could be, again, a kind of like an ominous little flag formation. And as we see the basing, and if that's the case and you measure it up, it could be a nice little trade. So we don't want to buy the breakout. You want to look for a pullback. And so I'm leaving those numbers and that trade rec still in there at 39.93. So that would be for Linear Technologies. All right. So next is Lilly. I think we had Lilly. We talked about looking for a move to stop ourselves in above 51.21. It was a technique, not buying a pullback, but rather looking to buy the breakout, looking for this thing to move with the seasonal tendencies of the market. So that was what we were talking about. If this market's going to prove itself, going to be an A, B, C, D wave, then you want to go with the breakout, not the pullback. So that's still in play, by the way. And then last but not least was Masco. So Masco was the same thing. If this is an A, B, C, D wave, then we want to buy the breakout in Masco. And, of course, we didn't get that. Another thing to look at is maybe we could get a pullback into these lows down in here one more time. But, you know, in essence, I don't really think that's one I want to really mess with, to be honest with you. I'd rather look to buy this thing on a breakout of strength and look for volume to accumulate. As you can see, if the market's pulling back, look what's happening to the volume. The volume's pulling back, right? So I'm not going to buy a pullback when the selling pressure is strong. And that's what a decline in on-balance volume shows, is that the selling pressure is strong. So buying a pullback ain't going to do a whole lot for me. I want to see this thing rally on strength with an uptick in volume. So those are the two different, as you can see, we're not just a one-trick pony. We have several different techniques and several different types of entry strategies and why we look at things and why Butch puts up these alerts. So we're going to keep those alerts right now. This was, again, discussed. These were the planning and scanning details from last week. I think it's important to review them because they're still prevalent. We also talked about the strength in the stock market last week. So, I mean, for a guy that's, if anyone has got the impression we were bearish the market, who in their right mind would be looking at giving people buy recommendations in stocks, right? So I think all we were suggesting is that we were going to see sector rotation coming into the marketplace, and that is exactly what we saw happen, as I've showed you with the difference between the Qs versus the diamonds. In addition, we're seeing weakness in gold. We're seeing weakness in the bond prices, and those are those fear factor markets. In last week's move, just to share with you, this is SunTrust Bank, and I'm going to go over here to daily. This is my scanners with Genesis, so I'm going to go over here to long stock daily, and I'm going to show you something. So all the stocks in the S&P 500. So this says long stocks daily. These are all the stocks that generated a daily buy signal in the S&P 500, which, by the way, SunTrust generated a weekly buy signal weeks ago. It had a little uptick in volume. But here's the point. This is a great point that I want to make. If a market's going down, right, and it's not going down on a decrease in volume. So here's the deal. So this is the low. The market rallies. Nothing happens. The market breaks again, and we don't go down on heavy volume. In fact, we generated 2 days before the unemployment report. Guess what happens? We get a buy signal. So, I mean, planning and scanning is for Mondays to go over the weekly charts and stuff, but, you know, it's important to go through scans to find out what sectors and stocks are generating buy signals. And so here's a stock. I mean, it's not a big deal. It generated a buy signal at 34 and it closed. It's now trading at 35.74. But it generated a buy signal on an uptick in volume. That's a very good sign. So more importantly, what I like to look for is just this. I like to look for a stock that gives me a daily buy signal on an increase in volume, right? So if you take a look at this, let's line up the crosshairs. There's our daily volume, and our price was, the volume was here. All right, so yeah, there you go. We're all lined up. So there it is. And as you can see, clearly, you can see the volume level broke out from the prior day, the prior day, the prior day, the weekly, and I mean, it just blew up, right? So that's a very good setup right there that I like to look for. And then what's the better, and to top it all off, the icing on the cake, is that it's in a weekly buy. Because it's kind of like looking at, and it's in a monthly buy. So it's kind of like looking at a day trade. If the 60 minutes in a buy and a 15-minute is in a buy and the 1 minute pulls back, or the 2 minute or 3 minute or the 5 minute pulls back, when those shorter term time frames fire off a buy signal and the higher degree time frames are in a buy, I like to go with those trades, okay? So same kind of concept when we're looking at stocks. So let me move in because we've gone a little bit over time, and I wanted to do a special situation for today, since it is Veterans Day, and have a chance for everyone to look at this. This is just to let you see 82 stocks out of the S&P 500. 82 stocks out of the S&P 500 generated daily buy signals on Friday. And that might be like Aflac. Aflac, everyone knows, the duck, the insurer, et cetera, et cetera. So what's really neat is we're going to break this down and say, okay, but out of consumer discretionary stocks, right, and it understandably why Nordstrom would rally, because it's got earnings out this week. So anyone short that market probably covered, right? So we had, again, a total number of 82 symbols generated a buy signal. What was the biggest, the strongest sector? I'm going to cut to the chase. Financials, 35 stocks. Nearly 40% of every buy signal came in the form of the financials sector. And if I break this down, you'll notice like Bank America, Bank of New York, Citigroup, Comerica, not just the, you know, your broker dealers like your E-Trades, but your regional banks, HBAN, Hudson City Bank Corp, which I kind of like Hudson City Bank Corp. Not only did it generate a high close doji the other day, it's been in a weekly buy. It also has this kind of longer term, same type of setup. You know, it almost looks like a getting ready for consolidated. It had this big push to the upside. It pulled back, old high, new lows. Do you see what I was sharing with you here? So here's the old resistance, turns into, it couldn't even get down there. So, I mean, I'll bump it up a bit, but just to get the point. And if we start to break out, this is one that it probably has a lot more to go. How much is a lot more to go? So when you look at a weekly chart, you go, well, I don't know, it's near the high. But if this thing recovers, and if the economy really recovers, I'm talking this thing has a lot of surprise left to it to the upside. I don't know about you, but maybe you can help me. I try not to listen to the news at certain times, but then at other times I like to listen to the news because I like to see if people are bearish in the market, and especially when I'm bullish. And more importantly, I want to hear if everyone's talking about Yelp and focusing on LinkedIn and focusing on momentum names and Tesla, and they're all talking about the high flyers, and meanwhile, they're going to miss this stuff. And if they are talking about regional banks on TVs, that means it's kind of like in the news a little bit. I got to be a little bit cautious. I would say, and I'm asking for your help, do you guys hear people talking about regional banks? I think the answer is probably no. I don't read about it in the paper. You don't hear about big moves, and it's just like one of these sectors that is kind of, thanks, Bill, for replying no. If you guys have heard about it, let me know. Just type it in. I'll see your posts. But you're not hearing people talk about regional banks, and that's the heartbeat of America. I mean, it's the Regions Financial. It's not the big bank that someone goes in to deal with in rural America. It's these regional banks, and the KRE has really been popping all year. We've been talking about it since the summer, since we had that trade in Comerica, which I'm an idiot because I certainly got out way too early. We got out of Comerica early, but we had a nice trade, and that's the neat thing about this industry is there's always a different trade down the road, or we can look at other markets. But what I want to leave you with is that this week there's still a lot of banks out there. I think I just mentioned MBIA, and I don't know, let's see if it's in MBIA. Maybe they have earnings, so MBIA, it's not in, oh, wait a minute, that's MBII. Wait a minute. No. Well, I'm going to move off on this because I seem to have maybe have my symbols confused, and I apologize for that. I thought it was MBIA. I'll have to go back. I wanted to see that myself. But here's, MT Bank Corporation, and as you can see, if you see one or two stocks in a sector start to look very similar in nature, it means that the sector itself is they're starting to bid up those stocks. Now, we just saw that kind of like the same formation. So for longer term stuff, I would have to tell you, there are some names in here. Northern Trust is another one. Northern Trust generated a sell signal. It did go down. Now, this is a monthly bar. So I want to focus in on this because here's another name that it's kind of sitting here in a seasonally strong period of time for a little while, but we have a nice volume breakout. Northern Trust, they manage money. Unfortunately, this is a $58 stock as well, so it's not the lower end. But I want you guys to focus in on some of these names. If you can't focus in on the regional banks, then look at the regional bank index. It's the KRE. You want to look at the KRE because it's it represents most of the smaller regional banks, the KBX, and I think one of the things and here's Regions. I was just mentioning Regions. Regions Financial, it also has that very similar kind of pattern here. So the moral of the story is look at the seasonal tendency of the market. It's the seasonal tendency of the market to go down. Everyone see that. And then all of a sudden, coming into the end of November, we kind of post bottoms. So I would say for this particular stock, which to me is an interesting situation, is that Regions Financial, you want to talk about stocks that are under the radar, no one's really looking at. They haven't really broken out in their seasonal trend yet, right? They don't begin their seasonally strong period of time. And remember, seasonal sometimes are a little bit early than we expect. But I want you to focus in on this indicator right here because, truthfully, when you look at that little breakout in price, we haven't really gone anywhere, but look what it did with volume. Man, they took Regions Financial by the horn. This is a lot. This is really in a strong sector because it's not a strong sector that I've identified by just looking at the overall ETF. I'm looking at the components and the stocks in that sector. And I think that what you guys want to probably focus in on is that stocks that may give us low risk trades. Now, if you're looking for a trade du jour, a trade this week, I think it's mostly important to look at the bonds. That's a trade that on any rally we could look at TLT, and I think there's an ETF there that you can kind of play on a rally. You want to buy puts in TLT, or you could look at TBT, which is the yield component of bonds. TBT trades the yield. So if bonds go down, yield goes up. TBT would go up. TLT trades price. So if bonds go down, TLT goes down. That's why I said TLT, you could buy puts. Let me show you what I mean. TLT. All right. So here's TLT. Like I said, bonds go down, TLT goes down. Let's look at TBT. TBT is the yield component. As yields go up, bond prices go down. It's an inverted relationship, and therefore you see a higher move to the upside. So truthfully, looking at the spread between the notes and the bonds, it looks like we have a really, and even looking at this particular chart, I mean, obviously there could be, you know, a nice shoulder, head, shoulder formation, a huge, significant rounding bottom in the market. But more importantly, take a look at this as far as old support and resistance. Boy, if you really want to see a pretty picture, this is one. So we take a look, and again, this is a weekly chart, and you can see what I'm reflecting and showing. Old lows turn into new highs, turn into new lows. That is a major swing point, and if this is another breakout market, you buy the pullback here, because this market, from a seasonal perspective on TBT, it generally goes up. Interest rates go up this time of year. So anyway, that would conclude what I wanted to go through this week, was to focus in on what the bonds look like, what the stock market looks like, what we did last week, and to alert you to what earnings are coming out and what other reports are. That concludes our session today, and our special salute to all our veterans. And I know this was longer than normal, but it is longer than normal because it is a special day for Veterans Day and for those that may have invested money longer term. And we are going to send this out to everybody, especially those who signed up, and let all our friends and family review this. So I wish everyone a great week. That concludes our session this morning, and we'll see you back here next week. Thank you, everyone.